It's amazing how synergistic, if that's a word, our businesses are in terms of your customers, your investors, and the trust in BRD. It's a perfect opportunity to be able to partner and defer some of those gains, because you're right. What we do is we tie the land up. It's the quintessential joint venture. I think it's the best joint venture possible. Everyone strives to try to achieve it. We've done a really good job of being able to do it, and because of our structure and our team and how we're set up, we can do it really, really well.
Welcome to the Build to Billions podcast, where we guide ultra successful entrepreneurs and investors on their journey from millions to billions. We believe that the key to scaling your business and compounding your wealth lies in practicing stewardship over ownership and constantly applying billionaire principles. Our ultimate goal, to help you compound your wealth so you can make a significant impact for yourself, for your family, and the community. I'm your host today, Brett Swartz. In each and every episode, we feature some of the world's top entrepreneurs, millionaires, and billionaires. They share their principles, values, secrets, and wisdom, providing you and I with the insights we need to reach the next level of success and impact. Hey, I'm excited about our next guest. He's originally from New Hampshire and also South Carolina growing up. And currently, he's the CEO of BRD Land and Investment, and brings over 18 plus years in the real estate industry and a proven track record of strategic planning and execution and driving organizational growth. He has a bachelor's degree from the Citadel and spent 8 years in the public accounting with PricewaterhouseCoopers before shifting to a career in home building. With over a decade of experience at Taylor Morrison and various expanding leadership roles, his track record of achieving outstanding business results, growth in competitive markets, and inspiring teams to achieve their full potential has continued, and so much more. Please welcome to the show with me, Maurice Johnson. Mo, how are we doing?
Doing great, Brett. Great. Thanks for having me.
Absolutely. For our listeners to get to know you for the first time, would you give us a little bit more about your story and your current focus?
Oh yeah, definitely. Well, as you mentioned, I'm from South Carolina, originally from New Hampshire. I'm an Air Force brat. I went to school for accounting. I'm an athlete. Out of school, I worked for PwC. Really and truly, one of the things for me is I love teams, and I love people, working with people, working together to accomplish a goal, and which really led me to home building and the desire to lead teams from a home building perspective as an operator. So spent my last 18 years prior to coming over to BRD a year ago with Taylor Morrison for a decade, and then Meritage Homes for the last 8 years. Growing divisions from across the Southeast, from the Charlotte division to Coastal Carolina, and then last I was a Florida region president for Meritage Homes. What I really enjoy is just our ability to really take a group of individuals that come from different walks of life, so on and so forth, and really look to try to take a project and see what we can do to try to accomplish different goals and form partnerships with our team and with our land sellers, with our consultants and the like. And that's what really drew me to BRD. I am one of the first customers of BRD. I bought land from Tim and Lindsay, my two partners, one of the first couple of projects back in 2019 when the company started. And there's a lot of synergies in terms of what we need and what our company provides, which I'm really excited to share with you guys today.
Absolutely. And we're going to be talking all things really kind of land banking or land investing on a different level today. And we're going to be diving into that. But before we go there, Maurice, I do want to take one other step back. I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. So growing up, who was Mo in the sense of like super strength or superpowers? Like, what are the one or two that you've been given? And how does that help how you help and bless people today?
Oh, amen. Definitely. We definitely are given, whom much is given, much is expected. I'm a big believer in that. I grew up in a Christian household, and one where responsibility and accountability is paramount. My father, as I said, was in the Air Force for 27 years. So I understand that. For me, if, people that know me, my biggest strength is my ability to number one, lead unselfishly. One of my favorite books is The Motive by Pat Lencioni. I'm a responsibility-driven leader versus a reward-centered leader. I think secondarily, I believe another strength is my ability to make strategic decisions. In my financial acumen, I'm really able to get down to the root of an issue and try to figure out kind of how the numbers work thinking about a profit equation and then working our way backwards. And then just the ability to listen and communicate and try to understand what the needs, wants, and desires are from everybody at the table to try to come away with a solution that works best for all involved. Again, great deals are not deals where one side of the table makes out like a bandit and the other side walks away hating the deals. A great deal is where everybody around the table has to give a little bit of flesh, a little skin, to where it's a little bit uncomfortable. We walk away saying, you know what, this was fair. It made sense from around the table based on all the facts and circumstances that were there around. So I think those are really my some of my key strengths. And the last thing is just leadership. I believe in leadership is everything. Referencing to Pat Lencioni, I developed quite a few people over my career, whether it was in public accounting to the home building front. And I really believe in that. People believed in me coming out of school. I didn't have a bunch of offers to work in public accounting coming out of the Citadel, a small school. So I went and ground and made a way and formed relationships. And so I believe that, one of my jobs at this stage of my career is to get back. And I've got several people kind of within my tree, if you will, that I'm very, very proud of. And I continuously try to give back to them and help them grow and achieve even greater achievements than I've been able to.
Absolutely. Love everything, Mo, you're talking about here. And we're going to be diving more into that. By the way, if you want to connect with Mo, you can actually go to the website. And the website is brdland.com. That's brdland.com. So let's dive right into the topic at hand, Maurice, which is basically building wealth and in land banking. And so for our listeners, for the first learning about this maybe for the first time, may have kind of heard about it, but don't quite know what it is. What's the number one secret to building wealth, doing land banking?
Yeah, and to be specific, it's land banking is one component of what we do. What we really do is we add value through acquiring and entitling lots and selling shovel-ready communities to home builders. That's the essence of what BRD does. We are a company that focuses purely on land acquisition and entitlements. Entitlements includes the zoning, it includes any annexation needs, it includes engineering and the like. Everything. We get our project to the point where a builder or our customer can stick a shovel in the dirt. And if you step back for a minute and you say why are we just focused on acquisition and entitlement? Well, depending on who you talk to, who you listen to, there's a 5 million unit shortfall in housing supply across the country. We operate in five southeastern states: the Carolinas, North and South Carolina, Florida, Georgia, and Texas. One may argue that if it's 5 million across the country, then in those 5 states, at least 10 million. Because there's other states where there's actually people that are leaving those states. And so from our perspective, why is there a 5 million unit shortfall? It's not because our customers, home builders and developers, don't know how to develop land really well, because they can. I know, because I did that for 18 years. It's not because they don't know how to build houses as efficiently as possible or even sell houses. That's not an issue at all. The real issue with the shortfall in housing supply is acquisition and entitlement. In BRD, we have a laser focus on how to do that and do it really well, and how to institutionalize it. Many of our competitors are ones that are either doing it in one location or one city, maybe a couple of cities. No one's doing it across 5 states, across the platform that we have it. Or they're our customers. They do everything from acquisition to a farm all the way to the U-Haul trucks, as I like to say. We want to focus here on the need, on the significant need and the bottleneck within the process, and go there. How can you make money in this process? It's really simple. The first thing that we do is we have a group of folks that go out and know how to buy land and have relationships in the markets and understand what a project could be, what the builders want. We know our customers really well because most of our team are former builders, whether they were like me all the way up to region president, to CEOs, to VPs of land and the like. And so what we do and how we make money is we go and find these projects. We're very nimble. We are the anti-big company when it comes to the ability to swift come in, make a decision quickly, get in front of the land sellers so they understand where we are. And then the big thing about it is what we do is we endeavor to keep our land sellers in the deal with us as we move along. And so that forms what I call it's our gold standard of acquisition, but that is really and truly the best joint venture you can ever imagine, where a land seller is in on a deal, and while we're adding value, oftentimes we're giving them money that they need to move to continue to stay in the deal. But we're adding value to the property to get them to a point, whether it's 1 year, 2 years, 3 years, or even 4 years down the line, where they can have a major liquidity event at the end, and we can and then in turn sell it to our customer.
Amazing. And so let me capture this, right? So the first secret to this is AI. It's more than land banking. It's actually acquisition entitlement. And I really would say, JVing with landowners to make it a
Mm-hmm.
win-win. And that is what your guys' niche is. And it
Mm-hmm.
sounds like specializing and focusing on that is the key here versus other like regional developers or even national developers. They're having to do all of the stuff where you guys are like, look, we're going to just go to the very beginning, right?
That's
Nothing
right.
happens if we don't have something acquired and
Mm-hmm.
and the land entitled, right?
That's
And
right.
working through the zoning, the annexation, the engineering. And so really it's not it's a housing crisis, but really the way that the root solve
Root
this or
cause.
help to solve it in a more exponential way is to focus like a laser not on faster ways to construct or lower cost of construction. Those are part of it. It's really annexing, entitling, engineering, all of that which goes beforehand. Is that a fair summary so far?
Very fair. Perfect.
Okay.
You nailed it.
Excellent. And then the next step is really making it a win-win for the owner. So let's dive into that. You're kind of getting into adding value along the way. Maybe
Mm-hmm.
give like a live example of a deal that you're working on now and how that looks for it being a win for the owner, right? Actually, before we go there, I'm going to take one other step back too, right?
Sure.
Someone might say, "Well, Mo, wouldn't most people just, the Taylor Morrisons or the DR Hortons, right? Uh, you know, don't they just do all of this themselves? Even backing up, give us a little bit of history of
Mhm.
of the 05, 06, 04, 03
Sure.
market, and you being in the center of that and
Mm-hmm.
kind of seeing from the ground up what was the challenges, what kind of went wrong, and what's kind of changed since then, so people get a sense of how BRD can really niche focus on this."
Absolutely, absolutely, and you're exactly right. I mean, the home builders, and I say we, I still often say that I was a home builder for 18 years, even though I'm focused on acquisition and entitlement. I'm still a home builder by trade, and I know how to do it all the way from the beginning, all the way to the U-Haul trucks, as I mentioned earlier. So home builders definitely can do this. However, what they can't do is they can't satiate and satisfy the demand that they need to grow. So, for an example, if a division, let's say in Charlotte, where I'm talking to you from today, if a division needs to get 10 communities within a year, approved, 10 new deals approved within a year, 9 times out of 10, in order to get 10 deals, you need to have a pipeline of 30 to get to that 10. And so, from our perspective, what we do is we bring projects. We don't need the builders to come in early. We know what builders want and need based on our relationships and based on our experiences. And so we work our deals and get them to a certain point, and then we advertise it and market to the builders. So from our strategy is we're not going to provide every deal to every builder. We may provide 2 deals to DR Horton, 2 deals to Meritage, 2 deals to Pulte, 2 deals to Lennar within a market, and we do that in every market that we operate in a way where we do repeat deals, consistent. Our customers, historical customers, DR Horton, Meritage, Mattamy Homes, Stanley Martin, NVR Ryan Homes, Smith Douglas Homes, Lennar Homes, so on and so forth. Taylor Morrison is also a customer of ours. So what we do is we do multiple deals with builders. And so what that does from a builder perspective, just speaking as a builder, I have a plan. I've got that plan of 10 communities. My guys and my team, my land acquisition team is focused on not only deals, they're focused on the memos that they need to put together. They're focused on the new community openings. They have to go back and talk to the sellers. Oftentimes, if there's a land development bust, there's a lot of different things that they are focused on, the ops meetings and things like that they need to do, because again, home builders get paid for sales starts and closings. The teams get paid for closing houses and selling houses. And so ultimately, there's a distraction. And so what we do is we provide our customers who have to focus on all those things. We say, listen, you got to get some of this. If you get 80% of it, and we can come and provide to you somewhere between 10 and 20% of the 80 you need, then it's going to be a win for you, because we're going to do all the heavy lifting. You can literally take a deal, And if it comes from BRD, you know that it's a fully engineered site. It's just not a flip site. The value that we've added is true, real value that they can take to the bank and get going and count on the new community opening next year.
Got it. Yeah, that makes perfect sense. It's just the sheer mass of demand coupled with that they do have sales, starts, closes, the full cycle that you guys
Mm-hmm.
can niche focus. Even if they're doing some of it themselves, it sounds like they are,
Mm-hmm.
you're able to pick up and deliver consistency, tangible value, fully engineered sites so that they can continue to build, right? Which is what they want to do as quickly as they can to keep all of their engines going forward. I mean, these engines, by the way, these are multiple billion-dollar publicly traded companies, right? So just talk
Absolutely.
about the certainty of, and maybe even back up, not back up, but just give us the play-by-play, right? So,
Mm-hmm.
what does that look like tangibly speaking, and then the certainty of having all the parties on the table to make sure that they're going to deliver when they're going to deliver, like the DR Horton's buying at the end of the escrow,
Sure.
and what you guys are doing beforehand, and how you're making the deal with the landowner.
Sure, absolutely. I'll kind of talk. I'll talk theoretically. So ultimately, what we do is first off, as I mentioned, we've got a team of experienced people. We call them IDCs, former again VPs of land, division presidents, so on and so forth across the home building platform. They're out scouring the market. We've got several tools and internal tools and processes to help facilitate lead generation and the like. They go out and they see what the opportunities. What they also do is they have relationships with builders within their markets. In addition to at the corporate level, myself and my two partners, Tim Samuels and Lindsay Jarvis, we have relationships as well with builders across the country. I've worked in home building across the country. I've worked in Atlanta, Phoenix. I've worked in Florida, the Carolinas. When I was in the corporate role, I spent time in Texas as well. And so we've got relationships across the platform. We understand what the builders want. They share their strategic goals, the submarkets they want to be in, and the like. And so when we look at a deal, we know what that deal is going to be worth. If we look at a project and let's say it's $1 million purchase price, we know that it's $1 million purchase price underlying. We know that we could likely take that $1 million and turn it into $10 million in terms of we were to add the value to the project based on the entitlements and the like. So what we do is initially is we look at the project and we figure out, okay, who's our ultimate buyers? And we don't typically want to go into a project unless there are at least three, preferably five different buyers that could potentially come in and buy this project from us. And again, that's based on our relationships, our knowledge, our repeat deals, our historical deals with builders. And so we know, okay, these are the customers that we think are going to buy this project, and this is what we think the project's going to look like. And then as we move forward with the project, because we end the due diligence period, we're going through and understanding and assessing the entitlement opportunities, whether it needs to be rezoned, utilities, so on and so forth. And we're taking a step-by-step approach throughout the project to, again, that's the value add piece, to take this piece of farmland or what have you and take it from a farm all the way to a fully engineered shovel ready site with utilities vested and ready to go. And so we take all that through. Once we get to a certain point where we know what we have, we understand the utilities, we understand any easements that are necessary, so on and so forth. We update our hypothesis that we had at the beginning to say, this is really what we think we need. This is what we're seeing in the marketplace, because we subscribe to all the marketing material that home builders do. We really underwrite our projects like home builders do. And so we update that hypothesis, and then we go to market with a handful. We start with our repeat build customers first, and then work our way down to get a builder in tow, to where when we get to the point where we're ready to go and we received all permits necessary to construct, we close at the same time our builders close.
Got it. Okay. And so walk us through what those numbers look like. You might tie it up for, from an investor standpoint, X amount of dollars, right?
Mm-hmm.
And I know it
Mm-hmm.
varies. And the
Yes.
timing of that, like how do you make it a win-win for the landowner and then the developer and also you guys?
Absolutely. Well, so essentially, it's like this. So if you use it, we like to use different rules of thumb. We say, okay, essentially, if we're at a $10,000 per lot purchase price for the project, typically we're investing anywhere from $3,000 to $3,500 a lot in pursuit costs, the entitlement costs, and things like that. Typically, for a $10,000 lot, if we got 3,000 to 3,500, essentially we're kind of all in at $13,000 to $15,000 a lot is our basis. Well, typically, by and large, we can sell that for, call it $25,000 a lot in terms of shovel ready. So what we're doing is obviously the front end of that is not engineer. It's the rezoning, consulting, and things like that. So of that $300 to $3,500 a lot, it's probably 30% of that, right? The back end, the significant dollars happen in the engineering once you've got the zoning and the density locked in. And so as we're talking about from our land sellers perspective, they come in and they have a project that instead of it being worth $10,000 a lot, it's really probably worth $1,000 to $2,000 in imputed lot, right? So we're adding a significant amount of value as we move forward, because essentially what they have is they have something that is not that there's only really one exit, right? It's kind of ag exemption. You've got farmland, so on and so forth. What we're doing is we're taking this thing and we're adding the entitlements, and we're increasing their opportunities to liquidate this project. And I think that's really, really important. A lot of people talk about land, and they have land within their portfolio. Many of your customers, the DST customers, have land within their portfolio, and they're trying to figure out what's the best strategy in which they could take this piece of property and liquidate it and sell it. What's the highest and best use for it? Well, that's exactly what we do, because we look at the property as it is today, and we say, based on all this and based on what we can get it for, this is what we think it could be. Now, why would you go with us versus going with the builder? Is because when you go with us, you're talking to the person that's approving the project, that's writing the check, to myself and my two partners. If you go with the other guys, you got to go to their corporate office, so on and so forth. And there are many different, we just talked about the complexities that the builders have to deal with at the division level. We haven't gotten to the corporate level and the like, which I could go on and on and on about. So we make it really simple for our sellers. They understand who they're dealing with. They can pick up the phone and call me at any time, call our teams and the like at any time. And then as I talk about, our builders, our customers, again, we are underwriting things like they do with the end in mind. And so when we bring them a project, they understand that we built a project and engineered it to where it can fit 5 or 6 different builders' sites, product in their house plans and so on and so forth. So it's one where they're not having to go in and second guess what we're doing. They understand that it's there. And again, it makes it easy for them to execute the business plan that they have in place, which is they want to get a deal and they want to stick a shovel in the dirt as quickly as possible so they can get that community open as quickly as possible for the sales starts and closings. And the last piece that I'll mention that hasn't come up yet is the big reason. One of the big reasons is that the acquisition and entitlement arm has been so tough is the time part and the gray part around entitlements when it comes to rezoning and getting the project rezoned, going in front of city council, the different agencies, whether it be DOT, the utility provider, so on and so forth, not to mention easements and things like that. Those are things that are not like a normal consistent cadence. They're things that happen. You have a conversation today and then next week you get a change. Well, that's the space that we operate in. It takes agility. It takes more the Minutemen approach versus the huge Spanish Armada to really execute that well. And so what we've done as BRD is knowing that we set up an infrastructure in place that we have several Minutemen, if you will, and we've got it kind of done, and we got a platform and a consistent platform and process whereby we can do it across our footprint and do it really well and share best practices and the like to make sure that we're learning as we go.
I love it. Absolutely. And by the way, if you want to learn more, you can go to brdland.com, brdland.com. You can also reach out to us, Capital Gains Tax Solutions. We actually have a new strategic alliance that we're announcing kind of officially on this podcast episode, where all of our clients mostly are selling businesses in real estate, and they're most comfortable investing in what? Businesses in real estate, right? Especially for people that have a proven track record, that have solid returns, and something they can really tangibly understand, and the people that are behind it, like Maurice is with a tremendous track record. And so we love everything that BRD is doing, and we want to connect you with them. So if you talk to Maurice or myself, just mention you watched this episode as well. deal, so we can make sure that everything is as streamlined and as efficient as possible, especially if you're exiting a highly appreciated asset. In fact, I had a couple clients, Maurice. That's exactly what they did. They tied up land, they entitled the land. They did it on a smaller scale,
Mm-hmm.
and they had less than a year hold, right? Because in
Mm-hmm.
fact, in this scenario, we can talk about the risk that's involved for an investor standpoint, that you guys are tying up the land, you're not closing on the land, and then you're
Right.
entitling over 6, 12, 18 months, maybe sometimes 24-month period of time,
Mm-hmm.
mostly 12 to 24. And
Mm-hmm.
it's that point you've added the value. You have the developer on the other side to close on the deal, and you have the seller of the land who gets to share some of the upside as well. And then it closes, but in a traditional 1031 exchange, it doesn't work because you haven't held the property for more than a year.
Right.
And so enter the deferred sales trust, the ability to sell, defer. You can defer capital gains taxes on short-term, less than a year hold, or even
Mm-hmm.
like a flip on this scenario, which is remarkable. And then be able to defer that tax and roll it to the next deal. So just talk about the power of just that. And we got connected through
Obviously.
DLP Capital
Yep.
about maybe almost a year ago now,
Mm-hmm.
and just establishing this relationship. You've been in the business for so long, and people get crushed with capital gains taxes.
Right.
Just talk about, and in this scenario, it'd be ordinary income taxes because it's not
Mm-hmm.
subject to long term because it hasn't been held more than a year. But just talk about that overall, strategy and just thoughts on it since you learned it so far.
Yeah, no, you're exactly right. I mean, it's amazing how synergistic, if that's a word, our businesses are in terms of your customers, your investors, and the trust and BRD. It's a perfect opportunity to be able to partner in and defer some of those gains because you're right. What we do is we tie the land up. It's the, like I say, it's the quintessential joint venture. I think it's the best joint venture possible. Everyone strives to try to achieve it. We've done a really good job of being able to do it, and because of our structure and our team and how we're set up, we can do it really, really well. But we tie the deal up, and then you literally, from an investor perspective, you have the opportunity to provide that $300 to $3,500 a lot. Plus, you've got some acquisition deposits and things like that to go to the purchase price. But those are there, and that's part of your deferral. And then so when it flips over and we sell it to the builder, there's that opportunity you've got that pickup. And really and truly, it all kind of boils down to the medium by which you're going to invest. We've got equity opportunities where we've got projects that we may put into. Maybe it's a pseudo joint venture. It's a separate economic entity or SPE that's set up where investors could have an economic interest in some projects, so they'll get paid out via a waterfall. Or there's opportunities where one could take and have a promissory note, which could be used towards operating capital and pursuit costs. And there's a certain defined payout from a cash flow perspective, a systemic payout that would come on a quarterly basis versus being tied to a closing. So there's several different opportunities. Really and truly, it depends on what the investor's needs, wants are. And we've got a project that can kind of line up for that, towards that.
Yeah, and to touch on that, by the way, if you want to learn more about that, again, reach out to me and my team as well. We've had a strategic alliance working with BRD. It's around 15 to 16% if you're curious on an annual basis. That can be paid quarterly or annually, which is pretty sweet. If you put $1 million in, let's just say it's $150,000 would be paid at the end of basically kind of a year one. Or you could also potentially take that in a quarterly distribution, which take 150,000, you divide that by 4 to be about 37,500 in cash flow, which is a nice thing with the deferred sales trust, because the deferred sales trust, it lives and breathes on cash flow, right? Because you're deferring that tax. And then it's also very efficient because as it receives that tax flow, it's typically able to expense it on its, because it has a promissory note that it owes back to you, the note holder, and therefore it operates at a very tax efficient, typically at a loss on its tax return. But in the meantime, this trust, which is kind of like an IRA, is receiving this cash flow in a very efficient way. And so that's kind of a whole other level of the deferred sales trust. But we want to make sure you understand that. But we believe, exactly what Maurice said, the ability to get excess cash flow above and beyond 10% in a conservative way, because at the end of the day, Maurice, it sounds like you might tie up the land, let's say for $500,000 or $750,000, right,
Mm-hmm.
as a deposit,
Mm-hmm.
and along the way, but if something goes wrong, which, by the way, so far to date, part of the interview process with you guys was you've never lost a dollar for an investor. There have been some deals that perhaps didn't go so well, but Lindsay, one of the founders, has filled that in, but that's very rare.
Mm-hmm.
But B, you guys are on the front lines of, are the developers, going to buy this at the end of this
That's right.
fully engineered project? Is the demand still there? So it's, and by the way, these 5 states are strategic for a reason. They're some of the fastest growing states, the most amount of jobs, population growth, all of those demographics make a lot of sense. Ease of, just getting these things passed, versus
Mm-hmm.
a place like California, New York, which would be a bear to get entitlements, right, and get engineering done and work through all of those types of challenges. So just talk about the kind of the safety of this, right? Because people hear these returns and they go, wow, 15, 16%. Brett, that sounds incredible, but does that mean I have all this extra risk?
Yeah, and you're right. Ultimately, there is risk. There's risk in everything we do. If you want a risk-free environment, then keep everything below the FDIC requirements, put it in the CD, and kind of go from there, right? And then your returns probably may not even cover inflation. From our perspective, the risk is mitigated really by our process. We spend a lot of time talking about the people in terms of who we have. We don't have, folks that were just building houses, sweeping out houses 2 weeks ago that are now going out and buying land. We got people that have decades worth of experience. Me and my partners combined have over 80 years of experience in home building, construction, or finance. So we got tons of experience. And again, the key part to it is, if you think about $3,000 a lot, and you think about the opportunity, the cost or the margin of, call it $10,000 a lot, and a cost of 10. If you think about that, if we were to spend every dollar of that 3,000, and again, as I mentioned, about a third of it's paid on the front, spent on the front end on the entitlements. The remaining 2/3 is on the back end after the deal is zoned and invested. Right? If you think about that, it's going to take, if you have 4 projects, or it's going to take at least 3 of the projects to go left in order for the return on those 3 projects to not get made up, if that makes any sense to you.
It does. Make sure I capture that, right? So what Maurice is saying, he'll tie up the project, and the amount of capital that they're planning on using to add the value, only a third of it is spent up front. And if for some reason it didn't work out, then the other 2/3 is not lost. Is that what you're saying,
Right.
Maurice?
That's right. It's not lost, because what happens is we say a deal doesn't work out, 9 times out of 10 it's time. And that's and so by the time we get to the point where it's gone through zoning, we know we've been able to reconfirm our hypothesis around who our buyers are. We've had conversations around it. 9 times out of 10, as soon as a project hits the respective municipality's agenda, we're getting calls from builders saying, "Hey, you guys on this deal?" So on and so forth. So we know we've already, and our guys chum the waters. They do a great job of that, building some demand and everything like that, and kind of working through that. So we know we have a deal. And so when we get ready to exit inspection period and let that deposit go hard, we have a huddle, we have a debrief, when we look at it and say, okay, are we ready to go? Do we have this deal? Are we certified? So on and so forth. And by then, we're probably somewhere between 500 to maybe $1,000 a lot in the deal, right? And so then we make the decision to kind of move forward. And so we mitigate risk by, number one, tying the deal up and keeping the seller in the deal. Number 2, we do it by virtue of our team. And number 3, we do it by virtue of our process, which includes making sure the product, right, is sufficient for many of our customers. So we have several different exits. So yes, there's risk. There could be a black swan event that could potentially happen. But if it does, by keeping the seller in the deal, we have the opportunity to have those conversations and those dialogues to say, hey, this is what we thought the market was going to be when we tied this deal up. This is what the market looks like. Let's revisit your needs, wants, and desires based on the current economic environment. We can revisit ours, and let's see what we want to do to kind of help then move forward with this. We can continue on the project. We can adjust pricing, so on and so forth. We can say, let's hold off. We can do several different things that we've done in the past and we can do, which will help us. And the reason and that's a key thing for BRD and what we've done is based on our experience. We know all 3 of us came up during the downturn. I cut my teeth in home building during the downturn. And so we understand how important it is to always stay in front and keep looking forward and mitigate as much as that capital as you can and just kind of step through things.
Which, by the way, to that point, right? This is so important to understand, everyone who's listening to this, right? That the downturns were different. Like what's happening now, and what could potentially happen with 35 trillion of debt, all of these different challenges going on here, and the 2008 crash. Even real estate right now, really, what's getting hurt are people that are too much debt, not enough liquidity diversification, overpaid for properties. A lot of actually more commercial, office,
Mhm.
right, retail,
Mhm.
or even multifamily if they took on too much leverage, right, have a
That's
debt
right.
that's resetting. It's more of a debt on commercial that's changing. Residential prices are either flat or barely increasing, right? And the demand is higher than it's ever been. And then the 2008 crash, it was pretty massive. It was more of like a residential crash, right? It wasn't
Yes.
mostly commercial. And to that
Mhm.
point, the part of what I believe I've heard from you guys, and correct me if I'm wrong, is these land developers were maybe doing too much of that. They were doing too much land speculation, or they weren't focusing enough. They weren't niching down enough. They weren't entitling fast enough, right?
Mm-mm.
They were tying up land without having the ability to efficiently push it through. And essentially, part of the, let's just say, the new regulations, if you will, or talk to me a little about that they
Mhm.
said you can't have a lot of this stuff on your books, like these multi-billion-dollar publicly traded companies, by even just nature of who they are and what they're trying to do. The regulators said you can't have all of this on your books or too much on your books. And that's where BRD comes in and says, great, we're not the publicly traded group. We're the private group, right?
Mhm.
We
Mhm.
are focused like a niche and a laser here. And this is our competitive advantage. Can you talk about that, Mo?
Yes. Yeah. Absolutely.
Yeah.
Definitely. Definitely. Yeah. And you're right. If you go back to the downturn, 2008, the economic crisis, it was a combination of two things. You're right. Speculation on land development. I mean, I remember driving sites that there were 150 lots on the ground, a mass graded 400-acre parcel, so on and so forth. So that was done. They also had just the debt with subprime lending and everything going crazy. It was so easy to get a mortgage back then. Today, it's if anybody's gotten a mortgage recently, it is like night and day. There's no such thing as a stated loan, so on and so forth. And so, by virtue of not having all the money out there and having mortgage writers, people who are applying for a mortgage truly have to submit their information, and makes it tough. That basically limits some risk. It mitigates some of the risk of that. And then to your point, as you mentioned, the home builders and developers, everyone is being very cautious based on what happened before, and they want to go in an asset light model. And so a lot of the things we look at on some of our larger deals is that first phase. How do we get that first phase in to where our builder doesn't have to put that much money up, but yet and still they can maximize the return? And if it's a 2 outlet community or even a 4 outlet community, where they can get all of their outlets open at the same time. We like to call it going 3 and 4 wide, reference in NASCAR. Us from Charlotte and the like. And so figuring out ways that they can, what's the least amount of dollars that they can incur and the least amount of land that they can impact so they can get going and get their communities open and the like. All of those things are harking on the responsibilities and the lessons learned during the downturn. Not to mention, the last point you mentioned is the overarching strategy that if you listen to any of the home builders calls, they talk about their pipeline. But the pipeline, their overall pipeline, is really kind of step two. The first thing they talk about is the percentage of their pipeline that they own versus control. Builders do not want to own and have land on their books for risk perspective, for return perspective, because a lot of the gray that we mentioned and the like. And so they're really going asset light in the way. And that's another opportunity where BRD comes in, because we bring on the projects when they're ready. They come to market when they're ready. So when a builder puts a project on the books for us, they're already, again, turning dirt within 30 days. And the other opportunity that we're continuously working to improve on is, you mentioned it earlier in the call, land banking or paper lot banking, where we are literally offering the builders on a larger project. We're offering terms whereby with a deposit, if it's 1,000 lot deal, you close on the first phase of 250, and then we'll roll the next phase over on annual takes or what have you, in exchange for a return, so on and so forth, and an interest escalator to do that as well. So we're trying, again, to solve a lot of the problems and the need, harkening back to what we learned in the past. And if you look at it from an investor perspective, well, what's the risk for me on that? If I'm an investor in a deal and the builder's in there, well, the builders put a deposit up. Phase one typically is where all the significant heavy lifting with the infrastructure, the utility, so on and so forth. And we work our releases to where if a builder walks from phase one, 9 times out of 10, we'll be able to move in and put somebody else in phase 2, 3, and 4. So the remaining and retained land has appreciated value as well. So
Absolutely love it. And by the way, this is like a full circle moment for me because growing up, some of you might not know, but I grew up building houses with my mom and my dad in the Bay Area, California. This is the late '80s and '90s, and seeing a project from the ground up. My dad was a general contractor and built, I don't know, probably 500 houses over his life, over his career, and just seeing what it takes to get these things done. Not at the he was the home builder. He would buy the land too at times, but it was fully ready to go. The lot was ready to go. But it's kind of full circle moment. That being said, we're running out of time, Maurice. Are you ready for the lightning round?
let's do it.
All right. So knowing what you know now, if you go back to your 20-year-old self, what's the one golden nugget? Make sure to tell yourself to do.
Bloom where you plant it. Enjoy the time that you have because tomorrow's not promised.
Awesome. Question number 2: What's the number one book you've recommended or gifted the most in the past year?
I mentioned one, The Motive by Pat Lencioni. I think it's a great book. I think every leader, not just leader, anybody that works with people should read. It's a quick read. You can read it. I read it the first time I read it on a plane. I've given that out as required learning in my marriage days, and giving that out for BRD as well. The Motive by Pat Lencioni. Another great book is First 90 Days for New Leaders by Michael Watkins. It's a great book also.
Awesome.
Culture Code by Daniel Code is my third.
Awesome. Well, those are great. Those are all three there. Awesome. Next question. What are you most curious about right now?
Yeah, I'm most curious about just consumers and kind of consumer confidence. The country, this global economy that we have. The world is getting smaller and smaller by the day, and just how we as a people, not just a U.S. U.S. country, but across the world, how we as a people can improve our communication. And when I say improve, we've got all these different means of communication, but how can we really talk and communicate better? And so I'm curious as to how we can continue to do this and share perspectives across different people from different walks of life, so on and so forth. Because I really believe that communication, this is why I was so excited. You and I met, and it's been a year, but and I look forward to getting to know you even more. But there's just so many different perspectives and synergies that we just don't get without having a conversation with people. And I think we need to have more conversations as a people versus sound bites and speeches, if you will.
Absolutely. That's part of why we went to a longer podcast here. If you're wondering, if you've been listening for a while, we're increasing the time just to capture a lot of that. Couldn't agree with you more. Second to last question, number one leadership quote or theme that you strive to live by, or maybe even the one thing your dad really taught you, from being in the Air Force for decades.
Yeah. Number one, as you ascend up the ladder, the light bulb, the spotlight is always on. So act as though it's on. So always remember that your word has to be impeccable. And so if you make promises, ensure you can deliver those promises. If you can't deliver those promises, be the first to admit you made the mistake, and be ready to reset and align on expectations going forward. So do what you say. Do what you say you're going to do when you say you're going to do it. And if you can't, if for some reason you fall short, be the first to take responsibility for falling short.
Awesome. And then last question, Maurice, which is kind of the essence and the theme of the podcast, which is practicing a mindset of stewardship over ownership, right? So what would you say is the way that you help to, or what does stewardship over ownership mean to you, right? The gifts you've been giving me, a blessing, help to others, and being a good steward of that. And then what's something you really feel passionate about for helping, those that are maybe a little more vulnerable and could, that you help to give back to the community?
Oh yeah, definitely. Yeah, stewardship for me is important. I mean, I think about it like this when I run. I mean, this is my first time working at a company that I have ownership to. I'm a partner. In addition to the CEO, I'm a partner as well. So I operate as though it's my money. And we have investors that are believing in Mo, believing in Lindsay, believing in Tim, believing in the BRD family. So their money is like my money. And so I think about it like that. And so again, if you follow what my dad said, set realistic expectations, deliver, do what you say you're going to do. If you can't deliver it, then you need to make sure you take responsibility for that. That's what I do on an everyday basis. And so from my perspective, if I say I'm going to do something, I treat it like it's mine, and I make sure everybody around us gives gives the blessings and the privilege of a position within here, the opportunity to do really well for yourself. Think about it like that and give it the reverence to where we're responsibility centered. And that's really what the motive talks about. It talks about leadership that is responsibility centered, i.e., I've been given the privilege of this job, and my responsibility is really more upside down, where I look at it. I always say, God blessed me with wide shoulders to do more than just to play football. It was also to make sure that I can lead a group of people. And I look at it like my investors, my customers, my employees, and the like, and our team members. They all are sitting on my shoulders, and so that's the part there. That's what's real important to me. And then when it comes to giving back to the community, I have having my father was in the Air Force 27 years. My mom taught in public school system for 35 years. For me, it's all about education and awareness. I didn't know anything about real estate and land. I make the joke that in 2005, when I was at PwC, and my buddy who was at the firm called me about an opportunity at Morrison Homes at the time, I was like, I don't even know what a permit is, much less home. I wish I knew then what I know now. I wish I had exposure and perspective into the real estate world back when I was in high school or when I was a young kid, what it was like about real estate and owning land, and how important it can be to building generational wealth. So for me, it's real important for me to increase awareness. You don't have to go to college and work at a bank, or not to say anything bad about a bank or a big company and the like, to do really well for yourself and create that generational wealth and a very successful career. There's several different ways within the real estate world to make that happen.
Amazing. Maurice Johnson, I want to thank you for being on the show. I want to thank you for using your gifts today of responsibility, accountability, being a leader who leads with responsibility. Also, I want to encourage you to keep using the gift of getting down to the root issue to make it a win-win for all sides, needs, desires, wants, from the landowner who's the farmer, right, who has a dream to retire and have some cash flow, to the developer who's on the front lines to building and helping the housing crisis, right?
Mm-hmm.
What you're doing is making a huge impact and a difference. I want to encourage you to keep doing what you're doing. And for our listeners who want to get in touch with you, Maurice, could you remind them one last time what's the best place for them to find you?
The best place to find me is our website, brdland.com. And just brdland.com. There's a link. You can send me an automatic email and I'll get it.
Awesome. I also want to thank all of our listeners for listening to another episode of the Build It to Billions podcast. We're also streaming on Capital Gains Tax Solutions podcast as well. We believe a lot of entrepreneurs and investors, at times we need to be reminded that stewardship over ownership is the mindset to practice, and also learning ways to invest and to build wealth through, like land banking, land entitlement, and working with professionals that are doing that is a great way to also diversify and get great cash flow. And so hopefully you've gleaned some lessons here today from Mo. And also we want to encourage you to take action if you're selling a highly appreciated asset. To start planning today, you can go to capitalgainstaxsolutions.com to start your deferred sales trust there. You can also check out the book, Building a Capital Gains Tax Exit Plan. That is a best-selling book on Amazon. It's called Building a Capital Gains Tax Exit Plan. Check it out on Amazon. Appreciate everyone listening or watching, and we'll talk to everyone again real soon. Bye now.